Since the end of the first quarter of 2022, we have announced a number of significant transactions for the partnership, including the divestment of our two oldest container vessels for $130 million, and the agreement to acquire 4 newbuilding vessels with long-term charters attached for $597.5 million. We have also only last week successfully placed a 100 million euro bond maturing in 7 years on the Athens exchange. Turning to the partnership's financial performance, net income for the second quarter of 2022 was $20.4 million compared with net income of $35.4 million for the second quarter of last year, or $10 million if we exclude the gain from a sale of a vessel we sold at the time. So our net income more than doubled year on year when comparing the operational performance of the partnership. As previously discussed, we have now exercised our right of first offer for 4 vessels. We still retain a right of first offer on 2 more LNG carriers currently under construction in Hyundai Heavy Industries in South Korea and delivering in late in 2023. In addition, Capital Maritime has contracted an additional 5 sister LNG carriers and Hyundai Heavy with deliveries set for 2024 and 2026. As these vessels find attractive employment in a currently strong charter market and subject to our ability to acquire these vessels, CPLP can potentially become one of the very few public companies that control a large fleet of latest generation LNG carriers with a unique portfolio of charters. We anticipate that 2-stroke latest generation LNG carriers, like the vessels we already own and these potential drop-down candidates, will benefit greatly from the positive LNG market fundamentals ahead, as described earlier. Having secured further financial flexibility with the issuance of our second bond and the proceeds from the sale of our 2 oldest container vessels, and in view of the strong cash flow generation we expect from our remaining fleet as well as the new acquisitions, we expect to be in a good position to take advantage of such growth opportunities while continuing to return capital to unit holders through distributions and unit buybacks.